You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time, once again, for TWIFO. This Week in Futures Options, the program here on the old Options Insider Radio Network. We break down the week that was from a futures options action perspective. What was trading, what was lighting it up, what was moving, what was shaking out there across the broad spectrum of futures options products. So you never know what's going to come up on the old show every week. It's kind of what makes it fun and kind of what makes it exciting. We've got our big product categories. Of course, you always got our surprise product of the week, perhaps even some crazy trades of the week. Got a little bit back and forth with Nick and I on that. We'll see what's winning the push and pull there. And we got a lot of other crazy stuff lighting it up. And of course, if you're just joining us for the first time, first off, welcome. Secondly, you got a lot of great archive episodes to sink your teeth into. The easiest place to do that, not just for TWIFO, but for all the programs on our network, theoptionsinsider.com. Head on over there, click around, download, stream till your heart's content. All the programs, nearly 10 years worth of content available for you there. If that's not enough for you, or you want to hit us up on another platform, we're available pretty much everywhere. iTunes, TuneIn, Stitcher, so on, so forth, Google Play, iHeartRadio. If you name a platform, we're probably there. If we're not, we'll go check it out. And, of course, you can always grab us via the app stores on those aforementioned stores as well. Just look for the Google Play App Store, the iOS App Store, or the Amazon App Store. Search for Options Insider, or just Options Insider Radio Network if you want to go whole hog there and grab our app. And then everything is available for you at your fingertips via the app. It's pretty cool. And, of course, you can always download stuff to take with you on the plane or the train or your commute or working out or however you like to listen to our stuff. And no matter how you access our stuff, including those of you who can join us live every Friday, 3 p.m. Central, 4 p.m. Eastern via Mixlr, MIXLR. We always tweet out the link every week over there at Options, or follow us along. If you have If you bookmarked a link in the past, don't worry. Same link every week. Just to fire it up or follow us in the Mixler app, and they'll let you know the second we go live. You guys can always ask us questions there. Either way, no matter how you access us, we love to hear from you guys. You are the heart and soul of the show, after all. All right, and speaking of the heart and soul of the show, it's not really me. It's also my cohort here on the old program, the creator of a little platform we like to use quite a bit called Quick Strike, Mr. Nick Howard. Nick, welcome back to the TWIFO program, sir. How's your week been?
Oh, it's been pretty good. Feels like it went quickly, but also feels like it's been a long time. So looking forward to Friday being here.
It does seem like TWIFO kind of just sneaks up on you. Like the week flies by and then bam, TWIFO. It's TWIFO time. And then that funky music is playing and all of a sudden you're like, man, what's cooking? What's cooking in the world of futures options? I love it. You know when that funky music kicks up, Nick, that it's time for who knows what the heck we're going to talk about. Maybe some lean hogs, maybe some beans, maybe some other esoteric products. But we're going to kick things off this week, Nick. I think it's appropriate. I do believe you will concur as well. I think it's appropriate to start in the realm of all things precious, because it didn't look too precious this week, particularly in the shiny stuff, a.k.a. gold, taking it on the chin. Some may call it, dare say, a gold apocalypse out there, with the futures getting crusholed out there, off about 60 handles pretty much across the board. By the way, you guys can always stream us and follow along with the show live via Mixler. You can also do the same with the reports over there, cmegroup.com/TWIO, This Week in Options. So you can follow along and see exactly what Nick and I are talking about. And if you do it over the weekend or after the show comes out later next week, it always rolls with you, so you can kind of see very updated numbers there. And the futures just taking a shellacking this week, off 60 handles, right around the 12.5, 1260 range now, depending on where you're looking out there in the term structure. We were just talking, 1400 dance for the better part of the last month or so out here, Nick, and gold, and the will they, won't they dance between the 1300 puts and the 1400 calls. All of that just off the radar now. Now we're talking 1200s, 12.5 range, which is interesting. We were also talking on recent episodes about how gold vol, it doesn't matter where you're looking, COMEX, gold, GLD, whatever, gold vol was just in the toilet. It was hitting multi-year lows. There was just not a lot happening out there in gold land to really spark any vol back to life. Guess what? That changed this week. This massive sell-off, of course, bring in a little bit of love back to the volatility. A net on the week, perhaps not finishing up as much as you might think, but still a decent net movement out there, up from anywhere from a point to about half a point, depending on where you're looking out there on the term structure. But still, compared to where it was last week, any movement is pretty interesting. Also looking out there, skew perspective, quick skew. Of course, if you want to check out the quick skew, head on over to Quick Strike. They have that really cool stuff. Shows you not just the net skew movement, but what's happening in the wings independent of each other, which is really what makes up skew. When you talk about skew as one number, it's kind of hard to get the true story. If you look at here, you'll see skews off about 3/4 of a point or so, pretty much across the board. But what does that really mean? But when you dig into it, you'll see that the put vol kind of creeping up, and call vol getting shellacked, at least to the earlier part of the week, then coming back a little bit. So that net resulted in a net decrease of skew, but you can see kind of the lion's share of that coming on the call wing, which is not entirely surprising. That wing has been leading the charge from a volatility perspective for the better part of the past few shows, past few weeks at least, with calls slightly, ever so slightly, leading the dance. And if they're getting whacked, I mean, skew's going to get whacked, and that's kind of what we saw. Calls, I think maybe surprising to a lot of you out there, calls were still the leading force. Partly because of a little bit of a late rally. We saw a little bit with gold, so people loading up on some calls that day. But overall, the 1,300 calls, which was the put strike last week. Now it's a call strike. It's up in the call wing now. It's how that funky stuff happens. Now that was leading the charge this week with over 13,000 contracts. Again, I think we had a little bit of a spark on Thursday, hence about 6,000, nearly half of that volume coming on Thursday. Perhaps why we're seeing calls leading the charge this week, because I know a lot of people come into this seeing the net numbers on the week would assume puts blew the doors off of everything out here in gold that week, and yet that's not really what we were seeing out there. Of course, puts were active. Don't get me wrong. The number 2 contract, substantially less contracts though, was the Nove 12.5 puts. They did about 8,000 contracts. Again, nearly half of that volume, about 4,000 contracts, coming on Tuesday when we saw a pronounced amount of the sell-off out there in gold. So number 2, 8,000, well off the 13,000 for the number 1 strike. Then we got pretty much ties across the board for 3 through 5 or so, all of them doing right around 7,000 contracts each. And again, reflecting perhaps some of the disparity of opinion out there. And I think, Nick, you can talk about this in a little bit because we've all been seeing a lot of interesting chatter about gold over the past week. The gold bugs still out there in force saying this is the buying opportunity. The gold bears saying this has been a long time coming. We're seeing that reflected in the options a bit as well. The Dees 12.5 and 1,300 calls splitting the difference, kind of tying for number 3 with about 7,300 contracts each, and then followed by the Nove 1,300 puts coming in, I guess, number 4 with about 7,000 contracts. Again, Tuesday being the big day for the puts, about half of the volume coming on that Tuesday for the Nove 1,300 puts. So a lot of stuff to parse here, Nick. I could keep going, but I could tell you're chomping at the bit to get in here on gold. So if you have some additional thoughts on the quick skew, any of the action we saw this week, as well as, we've talked before on the show, I think it's worth bringing up again, this whole notion, which you guys kind of I think perfectly sum up over there at Quick Strike as rent. And are the options out there really paying the rent? I think maybe we should get into that a little bit too this week. So I have at it, sir. The floor is yours. What's your thoughts here on this week of gold apocalypse?
Yeah, like you, I think I'm a little bit surprised with the level of increase in the volatility. I know we talked a little bit. We'll do a humble brag, Mark, you and I. We could do one today.
We've been known to do one or two of those.
I'm sorry?
I said we've been known to do one or two of those in the past.
One or two. We might as well take it. We talked how vol was, we did mention how vol was pretty low last week. And although our reasons or our play was more that we were on the downside of a range, right? On the downward side of a range between 13 and 1,400. I think we talked about the 1280 puts, but at 1280 puts against that 1320 mark did a fairly good return on investment this week. So we'll just have to keep an eye on that stuff. And I think what we have to start doing is just making better notes in the show notes, or even sending out the links and stuff like that, so we can make sure people can follow the things we're talking about a little bit better. But in any case, yeah, we're down a substantial amount. We went through that 1,300 strike pretty hard, and now that's going to probably, as we've talked about before, based on these open interest numbers and that type of thing, that'll start to be sort of our barrier on the upside. Although after the sharp move downward we had like this, it's obviously anything could happen in terms of the amount of movement upward or downward. But you also mentioned how there was, right after the big break, I saw people saying it was oversold. Then I see other people talking about how this is just the beginning. So I guess that's why there's trading, right? And it kind of comes into play, our put call ratios in both the volume and the volume most of the week, or at least in the liquid stuff, is it kind of was back and forth. There were some months where the calls were more active. That would be in the November, the front month right now, 20 days to expiration. I'm sorry, the puts were a little bit more active there. In our December, the calls are a little more active there. In the Jan, pretty flat. So I think it's still, there's going to be people on both sides of this market. So we did get a little bit of a pop, a little bit in the front month. Some of that's going to be attributed to the fact that it's a little shorter dated. But, deferred month, December, really not that much of all. And again, that's going to be taking into consideration the fact that we moved, 65 positions in the at the money strike. So even with that move down, our at the money from last week, which is going to shift with the at the money. So the curve pretty much shifted the way it looked all the way down. So not that much of a change from a volatility standpoint. So a little bit of a slide up, but not that much. And skew, I think what we see here is it went from a little bit positive to a little bit negative, or to almost flat. So what's that telling us? It's saying that the calls and the puts are generally the same amount, rich or cheap, to the at the money. So we're sort of in this happy smile. We're sort of in a happy place with gold. There's not too much sentiment one way or another from a volatility skew standpoint anyway. So again, it'll be interesting to see what plays out there. And if we go out and look at the quick skew for December, we're seeing that, both the call and the put are a little bit above, and really almost flat with the money on the 25 delta strike. So what we're seeing is a pretty flat curve within that, 25 delta to 25 delta. So when you see stuff like that, there's probably some opportunity there from a mid-wing volatility purchasing standpoint. So that's something to take a look at, right? We talk about skew, we talk about call minus put, and one being rich to the other, but important thing outside of which is rich to the other is how rich or cheap it is to the at the money. And right now it looks pretty flat to the at the money. So that's something to investigate as well. So it might be time for, selling, selling the at the money and buying the wings. Because if we continue this move one way or another, that might be a good opportunity there. But as far as anything else, pretty good, solid increase in open interest, almost 7%. 17% increase in the front month, which, like I said, still has 20 days to expiration. 25% increase almost in the Jan contract. So we had some good bumps here. You mentioned some of the high strikes that we're trading, or some of the strike ranges that we're trading, but nothing crazy in terms of call strike or even downside put strike. So a lot of the just in terms of the strike selection, the way the skew is played out, and just the overall sort of, I don't know if you want to call it indifference, but just the lack of pop and the volatility. There's still, I think people are still not quite sure what the direction is. And somebody mentioned, you're probably going to mention it later on as well, that if the dollar index keeps rising, that it won't be the end of the gold slide, right? Because it becomes less of a good investment if the dollar is strong. But right now it looks like the market's thinking that they're sort of in a volatility / directional holding pattern in terms of put call ratio trade and skew levels, as well as overall volatility. What do you think?
Yeah, and do we hit on the rent? Should we just do a quick rent rundown too? Because that's going to be our new theme of the week.
Quick skew, yeah. So gold, is it paying the rent? So let's take a look at the. I threw a definition in there. Maybe you could pop that up in the show notes too at some point. But let's see. I mean, I would say that, at the current volatility in the November contract, the rent is like $10. So I would say that, and the rent is defined, and I'm going to read it straight off of Quick Strike's education section. The rent is a measure of the expected daily change in the underlying future. Okay, and that rent, and we'll put it out there or we'll tweet it. You basically take the current volatility and multiply it by the futures price, and then you divide that whole thing by the square root of 251, which is the assumption of the number of trading days that we have in a year. Okay, and so that's going to give you the expected movement based on that current volatility per day. And right now, based on these levels, it's about $10.50. So I think we've done a pretty good job of meeting that criteria for the week, right? In terms of movement, in terms of volatility and stuff like that. So I think gold is definitely paying the rent. And I'll say, like we said last week, we mentioned that it was cheap from a long-term standpoint, given that, given the numbers and seeing what the expected, what's required to cover this movement. I think it's still cheap. So like we mentioned, that 25 delta area seems pretty flat to the at the money. Those are out of the money calls, out of the money puts. Might be something to consider there in terms of looking for some opportunity, because when I look at the straight up vol on those strikes as well, it's generally really flat to the ats. So we got a really flat center part of the curve. So I think it's worth taking a look at there, but definitely paying the rent. There's not going to be any eviction notice on gold volatility, right?
I guess the next question is, can you pay your rents with gold? I guess that's what we'll get to. We'll see here going forward. But yeah, that's an interesting term. In fact, if you're curious what about that definition that Nick just mentioned, I did just tweet it out as well, and we'll retweet it, put it in the show notes. The technical definition there from Quick Strike, if you are indeed so inclined. Nick, another product that was lighting it up this week, and not so much in the apocalypse, maybe a palooza, maybe a crude palooza. We did see some upside flurrying back to life here. Not a ton, but back flirting with that, and in some cases surpassing that ever popular 50 handle, something we've been waiting for a while. I know a lot of the crude bulls were hoping the OPEC meeting would do it, that would finally be the catalyst that would spark this back to life. We discussed that on a recent episode. Actually, you kind of poo-pooed it. It seemed like the calls were maybe coming back to life, and then they kind of just withered and died. Not so much this week with the calls holding a little bit firmer overall this week out here. Of course, the crude, like I said, up about a handle to a handle and a half, depending on where you're looking out here. Vol, of course, kind of a little bit of a different story than gold. We're taking it on the chin out here, off about 2.5 to nearly 3 points, depending on where you're looking across the board. And out here, of course, via the quick skew, which we always like to watch. The skew was actually kind of net unched on the week, which is kind of interesting. Means you kind of have opposing movements in both sides of the wing. That's kind of what we saw with the call wing getting a little bit richer. Nice little spike we've seen in the call wing. The calls haven't been this high for a little while here now, which again perhaps goes back to reinforce my theory from last week, Nick, that you so offhandedly poo-pooed, which was that the calls were actually maybe the worm is starting to turn. Maybe the calls are finally getting some love. I mean, and how long have we been talking about just puts all the time in crude? And it's kind of been a one-note conversation. Of course, we also saw a volatility premium coming off in the puts as well, so that combo kind of combining to get us effectively unched, a little bit of a gain in the calls, a little bit of decrease in the puts, that combining to pretty much even itself out. Not as much net skew gain, but looking at the little bit of twisting and rocking and rolling in that curve, you see the calls are kind of where the action is. But net winners on the week, it wasn't the calls. They were close, but it was actually the Dece 45 put. So we were talking before about that 40-50 strangle / risk reversal, how that was kind of where the battleground was being played out. Now that seems to be shifting. Maybe it's 45-55 now that our at the money is around the 50 handle, with about 23,000 of those NOV 45 puts lighting it up pretty even throughout the week. No massive surges on any given day. Followed close behind, kind of a tie really for number 2, with the NOV 55 calls again, 45-55, becoming the new wings as the fulcrum is around the 50 handle or so, with about 20,000 of those. That one a little bit different, about 10,000 of those coming later in the week when we saw a little bit more of a spark of life out there in crude, about half of that volume coming on Thursday. We also saw the 53 calls out there in November. Actually, I think I was saying a NOV before I meant to December. Excuse me. These are NOV. This is the NOV 53 calls that were lighting it up this week, with about 20,000, actually nearly 21,000. Again, nearly half, about nearly 10,000 going up on Thursday again. So Thursday was the day for the crude bulls to come out and force a little bit different makeup to the flow this week as well, Nick, which is kind of interesting. Maybe we'll get to this a little bit later if we have time in the futures options feedback. We have a question kind of relating to this, but looking here, usually how many times have we talked about this on this show, Nick, where the lion's share, over half, maybe 2/3 of the volume in WTI is going up pretty much in that front month contract, and now we have a scenario where it's pretty much less than half, about 43% going up out there. So that's kind of interesting. Maybe a bit of a shift, and out to month 2 with about 1/3. So maybe we're starting to see a little bit more fluidity, a little bit more nuance out there in the liquidity, maybe migrating and not just all clustering around that 1 point. But a lot of interesting stuff going up out here, sir. Is first off, is the wet blanket back here in WTI, or are you becoming a believer out here? And then also, how are we looking rent wise out here in WTI this week?
Well, if you recall from last week, I think volatility was in like 6 percentage points in the front, and then a little bit less in the deferred contracts. So now we have another week where we're 2, almost 3% in the between 2.5% and 3% off in the volatility still further. So, we go back to that same thing. We had some upside movement, but we're still sort of rangy, right? And you mentioned that we're over the 50 handle, and that's dependent on, we traded over the 50 handle today, but we settled back down below the 50 handle. But we also have to start to look at the front month versus the deferred contract. So right now, Mark, I put in the show notes too, there is the pace of the roll for the WTI November, December. So November, we'll see what happens today. So I would guess after today, it's about 50-50. So we almost have where it's ready for the December contract to take over from a front month standpoint. So that would put us definitely over 50 in the contract price. The one that starts tracking the ones that people start talking about, or the month that shows up in all of the grids that's displaying WTI price. So am I a wet blanket? I think that, volatility is in because we didn't make any new highs. We didn't find anything new and exciting from a price standpoint. Our skew, we can say it's kind of flat from from last week. It's a little bit more negative, which means a little bit more bias to the puts. But I'm going to call it flat until we see what this was as of yesterday, yesterday's close. So on the TWIFO report, it's not an intraday skew. It's just an end of day skew. So let's call it flat. So we can make. And you mentioned how the 45 strike now becomes like the new buffer on the downside. The 50, still going to say is sort of the upside buffer and potentially the downside resistance if we get up over that. But until we get over it and settle over it and trade over it for a period of time, trading the 1, 2, and 3 prices there, I think volatility is just still going to kind of hang around to get a little bit offered still. So I won't call it a wet blanket. Let's call it a moist towelette. How about that? So this way, it can put out the fire, so to speak, but it's not going to just completely dampen out the flame. So that's really sort of the observation I make here. When you start to look at the volume for the week, puts definitely were the winner overall. 1.3 put call ratio, which is, every 130 puts, there's 100 calls. So, and there were some big differences in these Jan, Feb, and March, and all the way out to these through March was mostly all, very much a put bias. So, and like you mentioned, you ran through some of the strikes, but nothing crazy in terms of strike ranges, right? We didn't see anything crazy on the downside. We got as high as like the 55 strike on the upside. We got some 60 and 65s that traded out in January, but, not a lot in terms of volume or opening or just sort of sentiment. So I still think much like, even though gold had that massive move down, much like gold, there's sort of we're stuck, gold had more of a I'm stuck in the middle type thing. From a skew standpoint, still looks like there's a downside bias here, but that's historically, I think, more the case as well here in crude. But, from volume standpoint, people still liking the puts. So I think that they're believing the fact that until we see something positive on the upside, they're still not going to be rushing out there to get the calls back in line with the puts, because still very much not the case here. And it'll be interesting because I look back a couple weeks. We were like, not last week's show, but the week before show, we were up about 4 vol, a little bit plus. Last week we were down 6 or plus. So overall, the last 3 weeks we're down about 4 or 5 volatility points. So, we have this rangy trade. No real, we had news, but we didn't have news that pushed us on new highs or pushed us down to new lows. So, volatility is going to come in. So from that standpoint, that's what I'm seeing there. And as far as rent goes, I'm going to jump out to the December contract. And I looked at this already. And rent, I believe, is definitely getting paid. I think it's between $1 and $1.10 from a movement standpoint. And I think we did that pretty much every day this week. And the ranges looked like, or the price action looked like it was in the time frame where you could have traded the up, part of most of the upside, most of the downside. It's easy to say when you're looking at the charts. But that range was around for a while, meaning you could have traded prices on the high side and traded prices on the low side to cover some of that rent. So definitely another instance where the volatility is being supported by the movement in the underlying. I'm going to take a look at the actual, and right now, the actual volatility is above the implied volatility for the December expiration. So that makes, so the futures are moving at a higher volatility than the implied volatility for the option. So rent is happening, and rent is getting covered, and we're seeing that, the underlying supporting it, and it has been supporting it for the last couple of weeks. So, and again, something else to consider when you're looking out there from a volatility standpoint.
Mr. Nick, we're coming up against it, so I will leave it to you, sir, to determine. Should we, it's kind of a weird week. I don't know if we truly have a surprise product, but we do have one kind of in store. Do you think we should do surprise product, or should we go to our old standby here that we have prepared? Well, what are you feeling? I'll let you make the call, sir.
Well, I think since rent is the theme,
Rent is the theme. Beans are paying the rent.
We could sing the old Jefferson song, "Moving on up." We're paying the rent. We're moving on up and paying more and more rent.
All right, then.
I say we go with the beans.
All right, the magical fruit returns then for our not really our surprise product, not really a surprise. We'll save our surprise product maybe for next week because we've had it on our radar for recently, but this week wasn't the best week. I don't think to talk about it. But of course, the last couple of weeks, the hogs were stealing the spotlight, so they got no love. But this week we'll table it. We'll see if that's gonna keep continuing to lurk on our radar as we move on back into the realm of all things magical fruit. In this case, soybeans, of course. Finishing, depending on where you're looking on the week, not a heck of a lot of action out there. On the future side, I guess, depending on where you're looking on the term structure there, but still moving a wee bit. We used to talk in the past about how beans were great collar trades. Now they're great rent trades. And again, if you're not understanding that term yet, check out our show notes or look at what we've been tweeting out throughout the show here. Follow us if you're not doing so. At Options on Twitter, at QuickStrike1, QuickStrike1 over there on Twitter as well for Nick, and a lot of great charts he sends out there throughout the week as well. Vol creeping up a little bit, I guess popping a little bit more in the front portion of the curve. Maybe a bit of some backwardation out there in soybeans land, to use a pull from the VIX jargon. But yeah, a little bit of popping out there, not so much farther out across the term structure. The skew, though, moving a fair amount. Let's pull up our own quick skew. Again, you guys can follow along, play along with the home game yourself over there, cmegroup.com/Twio. To generate your own reports. And we're kind of seeing a bit of a drop off in the put wing and kind of the call wing kind of holding steady. So not a huge adjustment out there in skew land, though it has been interesting of late. We saw an inversion, looks like back a few months back, and since then things have been rocking and rolling out there. Out there in skew land, I guess it depends really where you're looking on the term structure. The net movement, we don't have any clean, clear cancellations like we saw recently out here in WTI land. Looking at what was lighting it up this past week, again, this is another case where soybeans, like a lot of ag products, they have their set harvesting and planting cycles, and so that tends to dictate a lot of the options flow we see out there. Soybeans are certainly no different, and Nove has always been the leading contract, even when it was a few months out, certainly since we launched this program, and that is indeed the case again with Nove being the front month now, just lighting it up to the tune of nearly 75% of all the paper that went up this week going up out there in Nove. So if you were playing elsewhere, if you were playing in other months, you were pretty much playing by yourself because everyone was playing out here in Nove this month. If you want to know where the action was, it seemed like a bit of a split in the difference between the 950 puts, which were lighting it up to the tune of nearly 16,000 contracts, with about 7,000 nearly coming, so nearly half coming on Tuesday, followed number 2 by the Nove 1,000 par calls out there, about 14,500 of those going up. Again, fairly evenly split with about a third going up on Thursday of past week. And then, of course, not to be forgotten, the 940 puts also active this past week as well with about 14,000 of those. Again, lion's share of those coming on Monday, actually, about a third, a little more than a third going up on Monday out there. So that's kind of what's been leading our charge out there. I know, Nick, you've been keeping an eye on the beans. They have been a fascinating story to watch. We've seen skew inversion, skew changes out there, different setups, different strategies, really being profitable, going from collars to other types of trades. And now we're seeing some interesting rent paying, I guess we can call it, going on out there. And also decent spike in open interest this week, about 2% over there out there in the beans. So the beans, once again, perhaps returning to their status as the magical fruit for the week. Mr. Nick, what are your thoughts out here in beans land?
Well, I think outside of the fact that we've gotten more comfortable with this product than our surprise product of the week, and the fact that we were talking about the rent being paid. Here's another instance where each day we had enough of movement here where I believe that we were covering the volatility, or close to covering the volatility in the beans. Also, following the same theme again is we have a skew that's sort of moving towards a neutral position. It might be a little negative or positive here or there, but from a overall standpoint, we got the beans, the gold, and WTI where we're just sort of in this if you look, we also have in the show notes there, Mark, that we talked about, the vol curves for November, December, and January there, or not even November. I think we did December, January, and March. They're pretty evenly distributed smiles. So we have three products where there's still sort of uncertainty about which direction we're going to go. You said volatility, as you mentioned, volatility was up a little bit, but it was generally pretty flat. So when you get a week gone by with some movement with volatility flat, that the underlying has done its job to keep people's interest and to pay for itself, right? Because it's going to get pounded if it's sitting around, and it's going to get bid if it's moving more than expected. So I think that what I find the most interesting is that we have these skews that have moved sort of in line into the natural kind of textbook Sheldon-Natenberg smile for volatility. We're seeing a distributed range. In the volume for the week, we still have sort of more puts than calls, and overall we are still sort of we're a little bit biased to the calls, but the open interest, depending on where you look, it's still sort of a general sort of in the middle standpoint. So three different products, we've given you examples of opportunities potentially for trade in movement and volatility and skew. Okay, so those are the things I think to look at. Go take a look at those vol curves from a strike standpoint, from a delta standpoint across all those products, and you're going to see some pretty flat bottoms and some pretty equal distribution of a volatility on the upside and the downside, and some vol levels where the underlying movement is covering what you're paying in terms of the premium, right? So that's really what I wanted to talk about here, and even though we moved, we've been mentioning our high open interest strikes all the time, and in the beans, if you go purely by high number, you got the 900 to the 1200. But if you start to give yourself some leeway and sort of have A and B levels, the range is the kind of the B level range is 940 to 1,000, right? So $9.40 to $10. So again, it's the similar thing that we were talking about in crude. Until we're outside this $9.40 or $10 range, we're going to see sort of this trendy pattern where people aren't really exactly sure what the volatility is going to do or what the curve should look like. So, we want to watch that level in the beans again, I think, too. And then until we get some, and those are, I think the $10 mark is sort of a natural sort of, just like the $11 was when we were on the upside, the $10 was when we were coming down, that type of thing. So we get some natural barriers, and I think that's that's kind of what we want to try to do, is point out these places to look and watch and see. So that's what we're seeing right now. Not a lot of movement in the volatility, but still covering the vol, skew sort of flat and indifferent, and open interest still sort of in the middle, and volumes are still biased towards a put. So that's what I'm seeing there for now. I felt a lot more comfortable talking about the beans than our surprise product.
I could tell the surprise product was scaring the bejesus out of you. But before we move on to some quick listener feedback, people want their crazy trade, Nick, and I was weighing a bunch of different stuff this week. Maybe you have some thoughts as well. Nothing was whoa, crazy cakes leaping out of my mind here that this was way out. So we had some interesting outliers on last week's show. I like to look for some of those whenever possible, just kind of curious things. And a couple things were catching my eye in gold. Maybe you concur there. Maybe you found some other things that were kind of interesting, but particularly some upside trading in Dees. You mentioned how gold just getting shellacked this week. Gold apocalypse trading around the 12.5 or so range, 12.60, depending on where you're looking out there. And we saw a surprising amount of upside. We said calls were trading, but pretty far upside Dees calls were lighting it up this past week to the tune of a bunch, about 4,700 of the Dees 1460, and those might be my crazy trade of the week. I'll tell you more why in a second. We also saw a crazier strike, the Dees 1500 calls, which would probably make that a little bit crazier, about 4,000 of those, but that appeared to be mostly closing, so if that's just closing up on some upside, I don't know how crazy that is, even though the strike selection in and of itself may make it top of my list, but I'm probably going to lean the 1460s. Again, they're a little bit less crazy from that perspective, but it looks like those are primarily opening, in which case someone is repositioning and opening up some sizable open interest, nearly 5,000 contracts here on the week that gold takes it on the chin, and a lot of people out there thinking there is not a lot of upside here to be found. Not all. Obviously, the gold bugs are still out there. Perhaps our friend is clearly one of them, or perhaps he's got something else afoot. I don't know, Mr. Nick, are you on board with these trades? Or are you feeling something else? Maybe something crazy catching your eye in lean hogs land or something crazy?
No, I think I mentioned that I didn't see anything that was really sort of out of line, but I'll go with I'll agree with you for exactly the same reasons. 1460 I would vote for over the 15s, just because the 15s were closed. So you probably saw some people were just saying, okay, we had this big move, I'm done. Or maybe Vol caught maybe those strikes, that strike still caught a bid where they got in and were able to get out without much of a loser. So I'm going to say 1460 just because of an opening. I agree with you.
There we go. A rare moment of agreement here on the crossfire that is TWIFO. All right. Before we can start fighting again, let's move on into some of your questions. It's time for futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, we got time for some of your comments here and some questions. Let's kick things off. SellPuts tweeting. We were talking about gold pocalypse before. We saying, is gold pocalypse going to continue? He comments, yes, particularly if the dollar index keeps moving towards 98 and above. He included a nice little chart here showing it has been trending, shall we say, upward. Of course, the dollar not exactly the dollar index, I should say, putting a little bit of pressure here on gold. So at least we got one vote here, Nick, for gold apocalypse continuing. I'm guessing he certainly views those 1460s there in Dees and gold as being perhaps, shall we say, crazy. Would you concur?
Yeah, if he's, based on his chart, and he's got the trend line sort of moving positively, and I'm looking at we cover some of those products in sort of a covert version of Quick Strike in development, and it has that index has traded higher than you see on the end of that chart, but and you see how he has the arrow pointing up and as well. So like we're saying, the strength in the dollar, especially given the higher rates now the potential for higher rates now that the Fed seems that they're going to move in December with the supporting numbers that we've had over the last couple of weeks, it definitely is going to put some pressure on gold, right? So we'll have to watch this and see what we think, and we should probably look at trying to, and it's pretty obvious from what he's saying, but we should try to look at some gold dollar index correlation and see if we're seeing anything over shorter periods of time, and see if the numbers match what he's saying, which I'm sure they are because he's been around a long time.
Yeah, he's obviously not a gold bug, but a gold watcher at the very least. And I'm sure a lot of you out there, the gold bugs, are already typing furiously at their keyboards, disagreeing vehemently. If you do disagree, let us know. We'd like to hear counterpoints as well. We're just telling you what the flow tells us. So if you have a different interpretation, let us know. Another comment here comes from Ben Green. Nick, I guess he's liking what you guys have been putting out recently with those new open interest heat maps you guys have been disseminating. Again, you can find a lot of that. Just follow Nick and his team over there at Quick Strike 1. You can see they're putting out a lot of these different heat maps that are really kind of cool, not like anything else I've seen, certainly on the futures option side of the fence, showing you where things are really lightening it up from an open interest perspective. He says, one of the best I've seen for visualization of open interest. Thank you. So there you go, Nick. You're getting some love for getting some love for the visualizations and the heat maps.
No, I love at Stop Hunter, aka Ben Green, in his neighborhood. He's put a lot of our charts and tables out on Twitter, so I really appreciate it. So yeah, we're doing the best I can, and there's a couple guys out there that put a lot of OI stuff out for the Crude, so I try to follow their stuff up with like data or just a different look at the data. So I appreciate that comment, and thanks a lot, and keep the comments coming.
And we've got time, I think, for one more. It's a little bit of a long one. We'll see if we can squeeze it in. I was actually chatting about this topic with our friends at CME over there on the LSFO program coming out next week on the old network, listeners. But I thought it'd be good to discuss it here as well, because this is something that's kind of been puzzling you and I for a while, Nick, and clearly it's puzzling our listener. And here, this is TCal. He or she writes, I'm a somewhat new oil options trader, primarily in WTI. Over the last few months, I've noticed that the majority of volume trades in the front month. This is particularly true in active weeks, such as during the OPEC meeting. I've had success buying weekly options going into these events, but in these same active periods, I haven't seen the surge of activity in the weekly WTI that I expected. This is surprising, given the similar interest in weeklies in most other option products. Is this a function of the large institutional presence in WTI options? Perhaps there's a nuance of the product that I'm missing that isn't conducive to weeklies. I would appreciate your insight into this. Thank you for producing so much great free programming on your network. Well, you're welcome on the latter score there, TCal. And it is an interesting question, a bit puzzling. And in fact, when we were doing the CME show, they're announcing a bunch of new weekly options that they're launching and a bunch of equity products like the Wednesday weeklies and things like that. One area that they're not doing that is in WTI. And so I kind of put that to him. I said, why do you think, for whatever, particularly in recent weeks, Nick, where we've seen so much intra-week action, this is perfect setups for a weekly, and clearly there's a lot of action in the front months. I think we can intuit that there's a lot of retail interest out there in products like WTI, and yet for whatever reason, it's just it's not translating into the weekly contracts. And so they were speculating that maybe it's just due to the nature of a lot of the flow is still institutional. I guess I buy some of that. Certainly the longer term flow is going to be the producers and the hedgers, and they trade differently. They're not playing in the front month, but a lot of people are playing in the front month, and a lot of them clearly are retail. And yet, for whatever reason, they're not playing in the weeklies. I don't know. What are your thoughts here, Mr. Nick, on this question? That's kind of plagued us for a while too here on the program.
Yeah, we've never gotten a good answer from anybody about that. In fact, I put a message out there a while back on Twitter to see if anybody had any answers. I never got any feedback on it, which isn't necessarily surprising. But I did look specifically on the day of the meetings to see if the weekly activity increased at all, and we really didn't see anything. So I don't know if it has to do with the date of expiration on those contracts, or the fact that they don't tie, they don't tie so tightly to the expiration of the future. But we're still trying to figure it out. And like you said, the same thing goes in gold, right? I looked this week after the big move, and there was really no activity either there in the gold weeklies, especially after that big move. And that's where you make your dough, right? Is if you're playing. If you're short some options and it's not moving around and they're short dated, you're going to get your premium in there from a decay standpoint. If you're long on those big moves like we had this week in gold in particular, you're gonna get some big benefit there. But nothing's really happened there. And again, part of it, they're going to know better than I am. But part of it also be that the market makers just don't want to, because it moves around too much. Potentially, they don't want to play around in that and make tight enough markets where people are actually going to trade on them. So we're going to keep. I think that I really believe the worm's going to turn on those, especially because if you watch the Wednesday weeklies and the S&Ps, which are now available on Quick Strike as well on the free as well as subscription version, you go out there and see they have open interest. There's markets being made all day in those. So clearly, it's a function of need and a function of use. So I think that the time will come when we'll see it, but not quite yet. I don't know why. I'm looking for an answer too. So when I find one, I'll make sure I tell you, and you could tell everybody else.
Well said there, Mr. Nick. Unfortunately, that music, we're getting the hook. It's time for us to bring to a close this epic. It keeps getting longer all the time, Nick, but we love it. It's so much great feedback, so much great stuff to talk about. So many hot products out there that we want to hit on that the program just keeps stretching. But we like that. It's a good problem to have. And of course, the music means we're bringing to a close this epic journey. What a journey it was. Started off over there, all things gold apocalypse, getting into crude palooza, or perhaps lack thereof, more of a moist towelette. I like that terminology, than a wet blanket out there in crude. But still, maybe not all the love the gold or the crude bugs really we're hoping for this week. Getting back into the beans. Beans get a little more exciting. Everybody across the board paying their rent this week, which is a nice thing. So if you're trading these products, at least from the long premium side, you're paying your rent too. So that's a good thing. And then, of course, some of your questions coming out here about gold and all sorts of other fun products, heat maps, and the continuing mystery that is WTI weeklies. We'll dig into that. We'll keep digging in. maybe we'll find out. I like what you're talking about with the market makers. We have seen that before in other products where they just don't want to play in a particular area of the term structure or the area, like we saw that in minis on the equity option side. They just didn't want to touch it, and so the spreads were wide and the product died. Maybe there's something to that there as well. They just don't want to play in that portion, and so things are wide and no one's playing there as a result. That could be it too. A lot of nuances. The devil is very much in the details with all these products, but that's going to bring us to a close before we go. Mr. Nick, obviously getting some love on the heat maps. What else are you guys cooking up over there in the land of quick strike?
Oh, goodness me. What do we got going on? Well, if I'm being completely honest, we did a lot of cleanup this last couple of weeks, sort of just like stepping back and taking a look at things, trying to generalize some stuff. So I don't think we have anything particularly new coming out. But with that said, like I mentioned, we do have those new Wednesday weeklies out there for your enjoyment on the indexes. And as well as the new FX products out there, right? Because as we mentioned before, the exchange has changed the American FX options. Everything's going to be European now. But since you can't just change a contract midstream, you have to create a new product and release new expirations. So take a look out there, and you'll be able to find the new Wednesday weeklies, and the new FX stuff. And we switched around the S&P so you can finally take a look at the weeklies and the regular contracts, the regular quarterly stuff, all in the same place as opposed to treating them like separate products. So nothing new from there's some good new secret stuff coming out, but it's under lock and key, and I don't really have the ability to talk about that. But once that's ready to go, I'll be sure to mention it in one of the future shows.
There you go, listeners. Check out cmegroup.com/Twio to play with those charts, generate your own for yourself out there, so you can play along with us on the show. And of course, follow Nick at QuickStrike1, QuickStrike1, so you can see all these cool heat maps he's tweeting out throughout the day. Although of course we do our best to put those out there as well via Twitter and Stock Twits and all the other platforms. And so on behalf of Nick and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for those of you who can make it every Friday, we'd love to see you guys as well. And we'll see you next time right here on Twifo.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.